Report. Why FVS1? Stocks Futures is Europe's equivalent to the VIX, a trader's guide. Hey traders, Jack here. Let's break this down like we're chatting over coffee. Today we're deep diving into FVS1, the ticker you see on platforms like TradingView for stocks futures. If you're new to volatility trading or you're US-based and use the VIX, this is your roadmap to understanding why VSTOXX is basically the European VIX, how it compares, where it differs, and how smart traders ride geopolitical news waves with it. I'll lay it out step by step in plain speech, like I'm narrating a webinar. First off, what is VSTOXX? The VSTOXX, full name Euro Stoxx 50 Volatility Index, is the benchmark fear gauge for European equities. It measures the market's expected 30-day implied volatility in the Euro Stoxx 50 index, which tracks 50 major blue-chip stocks across the Eurozone, like LVMH, ASML, SAP, Total Energies, and Siemens. Think of it as the European mirror to the S&P 500. The index is calculated in real time using prices of out-of-the-money options on the Euro Stoxx 50 traded on Eurex exchange. It uses a variance swap methodology, similar to the VIX, where it builds a portfolio of options to capture implied variance, then takes the square root to get volatility. The main 30-day VSTOXX, ticker V2TX, is the flagship, but there are sub-indices for maturities from 60 to 360 days, giving you a full term structure view. TradingView.com FVS1. Charts and quotes. TradingView. Now, FVS1. Specifically, that's the TradingView symbol for the front-month VSTOXX futures contract, Eurex. FVS1. Often the continuous contract chart. VSTOXX futures trade on Eurex, cash settled in euro, with a contract multiplier of 100 euros per index point. So if VSTOXX futures are at 20, one contract is worth 2,000 euros. Expirations are monthly. Final settlement on the 30-day constant maturity. Open interest and volume have been strong. Averages over 1 million contracts traded monthly in recent years, with tight bid-ask spreads around 0.06 to 0.07 points. It's liquid enough for retail and institutional traders. Eurex.com VSTOXX, monthly update January 2024. Why is it the European equivalent of the VIX? Both are implied volatility indices derived from index options. They spike during uncertainty, crash in calm markets, and show strong negative correlation with their underlying equity indices. When fear rises, VIX and VSTOXX both surge as investors pay more for protection. Historically, they move in tandem. Correlation often 0.8 plus, because global risks hit both sides of the Atlantic. But here's where they differ, and these differences create trading edges. Regional sensitivity. VIX is U.S.-centric, heavily influenced by Fed policy, U.S. earnings, elections, and domestic geopolitics. VSTOXX reacts more sharply to Eurozone events. ECB decisions, German elections, Italian debt drama, French politics, or EU-specific crises. For example, Brexit or Euro debt crises spike stocks harder relative to VIX at times. Level and term structure. VIX often runs higher in absolute terms during US-led shocks, but VSTOXX can stay elevated longer in European turmoil. The VIX-VSTOXX spread is tradable. When one is expensive relative to the other, e.g., VIX implied vol higher during US debt ceiling fights, you can spread them. Product ecosystem. VIX has a massive US ETF/ETN world, VXX, UVXY, SVXY. VSTOXX has fewer direct retail products in the US, mostly futures and options on futures via Eurex access brokers like Interactive Brokers. No huge leveraged ETFs like UVX for VSTOXX yet, so you trade the futures directly or use spreads. Calculation nuances. Both use similar math, but VSTOXX interpolates two nearest expirations for 30-day constant maturity, with slight differences in option screening and weighting. Market hours and currency. VSTOXX trades in euro on Eurex, European hours, VIX in USD on CBOE, US hours. Currency risk, if you're non-euro. It's systematically trading volatility spreads, BSIC Bocconi. For newer traders or non-European market folks, you need a futures-enabled broker with Eurex access, IBKR, Saxo, or similar. Margin requirements are reasonable, around 1,000 to 3,000 euros per contract, depending on vol. Futures are cash settled, no delivery. Watch contango. Like VIX futures, stocks futures are often in contango, front month lower than later, so long positions decay over time unless vol spikes. Short-term trades are best. Options on stocks futures exist for more strategies. Always use stops. Vol can move 20 to 50% in days. Now, trading success with geopolitical news storylines. Volatility loves fear. Geopolitical events, Middle East tensions, Russia-Ukraine escalations, U.S.-China trade wars, European elections, or energy crises, crush equities and pump vol indices. Stocks often leads or amplifies on Europe impacting news, e.g., French snap elections or ECB emergency moves. How to trade it successfully. Anticipate spikes. Monitor news wires, X, Reuters for headlines. If a major geopolitical risk emerges, e.g., Strait of Hormuz threats affecting European energy, buy front-month futures, FVS1, pre-event or early spike. Vol mean reverts, so sell after the peak. News following. Use term structure. If short-term futures spike more than long-term, it's event-driven fear. Go long short-dated. Short long-dated for relative value. Spreads. Trade VIX versus stocks futures when one region is hit harder. If US calm but Europe tense, buy stocks/sell VIX. Risk management. Vol is mean reverting in clusters. Use GRCH models or simple thresholds, e.g., enter long if stocks less than 15 and news brewing. Avoid holding through calm. Decay kills. Examples. In 2022 Ukraine invasion, stocks spiked to 40 plus. Recent 2024 to 2025 macro/geopolitical risks, elections, wars, kept volumes high and term structures elevated. Bottom line, FVS1. Stocks futures give you direct exposure to European fear. It's like VIX but tuned to Eurozone dynamics. Perfect for diversifying vol trades or capitalizing on global news that hits Europe harder. High risk, high reward. Always DYOR, size small, and trade what you understand.